Sources of corporate finance. Under this topic, that is sources of borrowed capital, we will now be studying about commercial banks.
Commercial banks. What is the meaning of commercial banks? A commercial bank is a type of bank that provides services such as accepting deposits, gives loans, and offers various financial services to companies. What does it fulfill? These banks provide finance to fulfill short and medium-term business requirements. How are loans provided? Banks gather savings of the people and give it to the company as medium and long-term loans. How do commercial banks assist corporate sector? It is assisting by granting short-term, medium-term and long-term loans. So these loans may be against the assets, that is the current assets, or it can be against the fixed assets of the company. It also assists by subscribing to shares and debentures. That is, whenever the company is going to issue shares or debentures, these commercial banks is assisting by subscribing to it. So, this helps the company in increasing their capital investment. By underwriting, that is guaranteeing the issue of securities of the company. If the company is unable to gain the minimum subscription while it is issuing the securities, these commercial banks are underwriting. That is, they purchase the balance of those shares and debentures which are not being subscribed by the general public. Let us now understand the various schemes for disbursement of credit to firms that are offered by the commercial banks. Overdraft, allowing the current account holders to overdraw the amount up to a credit limit sanctioned by the bank. This helps the firms to fulfill their services towards various other companies or creditors which has issued any sort of checks which will be honored when these checks are being credited into the bank account. Cash credit. Similar to overdraft, loan is sanctioned on the basis of security offered by the borrower. Interest is charged on the amount that is utilized by the firm. Cash loans. A lump sum amount is credited to the firm's account and interest is charged on the balance amount. So whatever amount will be credited and whatever is the amount that is going to be utilized, the loan that is there, it is going to be charged as per it. Discounting bills of exchange. The drawer sells the bills to the bank at a discount. So, discounting of bills of exchange is referring wherein the buyers and the sellers get the facility of getting the amount. So, herein, wherein the buyer, that is when he purchases the goods, the seller is going to get a bill signed by the buyer. So, these two parties enter into a contract to pay the money at a later date. The seller then approaches the bank and he sells the bank to the bill. This bill is being purchased by the bank at a discount. The seller gets the money on the date before that is mentioned in the bill. On the due date of the bill, the bank approaches the seller and gets the bill honored.